What's up, everyone? Today is August 13th. It's a Friday. I'm going to be going over the one trade I took today. It was another Tesla trade, and it was another winning trade. It wasn't as big as my yesterday's winning trade on Tesla, but this still was a decent win. And what I really liked about this trade were my executions. So I'm going to be going over the entire thesis behind that play, the levels I was watching, entries, exits, market condition behind it. So all of that. I'm probably also going to chart plays for next week live, just so you can see how I develop all my plays from scratch. And then lastly, I'll just go over market context, what's going on right now. So this is a Friday, and now I'm ending my third week profitable. So last 3 weeks I've made money, and the last 3 weeks have been incredibly difficult to trade. So as long as I just stay, as long as I just keep up my consistency and continue to do what I do, I should be in a good spot in the long run. So let's go to Tesla now. Let's go to a 1 hour time frame so I can show you the origin of this level. So what I was watching on Tesla was the 724 key level breakout slash gap fill area. So this level had multiple rejections. We had the entrance of the gap fill right here at 724. Then you fast forward, we have multiple tests here, 2, 3, 4. We also formed this wedge pattern. I was able to capitalize nicely on this breakout. So now I'm not too focused on the wedge. I'm more focused on the 724 gap fill. So that was the entire thesis behind the play. I was watching the 724 level, knowing it broke out of the wedge pattern, we can definitely break the gap and go into 4 hour supply at 737. Also, we have been forming higher lows on a 1 hour time frame chart. So what that's telling me is that buyers are interested in buying every single dip on Tesla. They keep on reclaiming the 700 psychological level, and we are getting ready to start making our way back up. So that's just the entire thesis behind Tesla, the level and the plan going into it. So now let's go into entries and exits, and I'll show you exactly where I entered and why. Okay, so I took Tesla right off of the open. Tesla gapped up slightly pre-market, letting me know that buyers were in control. So on a 5 minute chart, my entry was as soon as this candle went from red to green, I entered pretty much at 734, 724. We instantly had this nice push up. I entered 4 contracts at $3.10. When I entered, I'm not even kidding, the next second contracts were at 450. So for 10 seconds, I was up $600, which is a lot of money. However, my target was 734. 737. It doesn't matter if I'm up $600 at one point. I'm just gonna scale out and continue to stay patient towards my target. So that's why I took 1 contract off at a premium price of 4.45. So on the first contract, I locked in around $130. Then immediately, this move happened so fast that I wasn't able to even look at the chart. I just put my sell limit and I got filled. And then what I saw was this massive upper wick. Buyers tried pushing us above the 724 level, but I was a little bit cautious because when a lot of traders watch a gap fill area, it tends not to work out immediately, because when a lot of retail traders watch something, the chance that it's going to work out is much lower. So that was the 724 breakout. So I capitalized on 1 contract. And then as soon as this candle started going from green to red, I tried putting my sell limit. I forgot to click sell, so instead of selling for break even, I ended up selling the last 3 contracts for a 20-cent loss. So right here, I think it was somewhere around here. So let me just highlight, this is green, so this was my entry. So keep in mind, I played 4 contracts. I made good money on one of the contracts. As I always talk about, it's super important to scale out into strength. But do not sell your entire position, because you don't want to panic sell because you're up money. You want to stick to your plan. My plan was for Tesla to hit 4 hour supply at 736, And I knew that if Tesla moved higher, then I would make, a grand 1.5K, even 2K on this trade. So I don't want to sell my entire position blindly when I'm in profit. That's why I scaled one contract out. However, when I play the open, I have a go quick or get out mentality. So as soon as this candle started going back from green to red, I wanted to play it safe. I knew the contracts were jumping around. So I accepted the loss and I took a loss on the last three contracts. However, because I scaled out on the first contract, I ended up netting, I think, $72 after commissions on this trade. So this was a perfectly executed trade by me. I had a solid trading plan going into this. I had a solid entry. I had a solid first scale out, and then my last three contract sell limit could have been a bit better, but you won't get everything perfect. But this was a near perfect executed trade on Tesla. I know Dylan and a couple of other people re-entered right here. However, I was not confident re-entering Tesla just because I wasn't convinced by the volume. And the second thing was I wasn't convinced by this upper wick. So my analysis planned out perfectly. I avoided this trade and this was just a high if they fail. I just didn't see the necessary momentum for Tesla to continue higher because of this upper wick and because of this decreased volume right here. Yep, so that was the entire Tesla trade. I'm just going to highlight this volume. This is the decreased volume I was talking about. This decreased volume gave away that Tesla wasn't going to move higher. You compare that volume to something like Netflix today. Netflix was on a tear in the morning. This is very, very nice and consistent volume off the open. Tesla didn't have that, and that's why I did not re-enter. So another very, very good example of me staying disciplined and not forcing unnecessary trades. So after this, I genuinely did not see any other setups. I'm going to transition from this this trade review now into market conditions. So let's first start off with SPY. What is SPY doing? SPY is range bound. As I talk about in every single one of my videos, if SPY is range bound, the probability that setups are going to occur are much, much lower, and hence no setups really occur when the market is choppy. If I go over to QQQ, you can clearly see that QQQ had a nice push up. However, I knew that if I just scroll out a little bit, if I go to a 1 hour time frame, you can see that on the bigger picture, QQQ is still choppy. The only thing stopping us from all-time highs was this fresh 4 hour supply zone. I'm kind of disregarding this 3 hour supply zone because it's weak. But just looking from a market context place, what happened was NQ had a nice push up last week, and then sellers tried bringing us lower. However, buyers realized that the market is not ready to go back lower and hence bought the dip. So what does this tell me? This tells me a couple of things. First of all, there's no reason we should be playing puts at all. This is just a clear example of on a short-term trend. This trend line has been acting as support multiple times. Every single time sellers try to bring us lower, every time sellers have these aggressive drops, buyers buy us right back up, either in pre-market or either the next day. That's why playing puts in this market is not a high probability setup. And as soon as we hit 4 hour supply, we reject it because this supply zone is fresh. As I talked about, fresh supply zones have a very, very good chance of working out. But now that this supply zone is fresh and this supply zone is weak, there is nothing stopping NQ from now hitting all-time highs and moving higher. That's why I'm very, very bullish going into next week. Even though I try my best not to have biases, I just let the market do what it wants to do. But just from a longer term perspective, I'm still bullish, and I definitely think NQ is going to reclaim all-time highs pretty soon. So that's just some market context. It's super important to not only understand the equities you trade. Every single one of these equities on my chart, except for maybe NVAX, I'm still studying its price action. I understand how each one of these stocks move. I understand which ones are super volatile. I understand how the contracts move. But what's most important is I understand what the general market is doing. SPY is still clearly in an uptrend. I use the zones to paint the full picture for me. And I also do the same for QQQ right here. So it's very, very important to understand market context and try your best not to have a bias and just read what the market is giving you. So yep, that was market context. Went over the Tesla trade entries and exits. A couple of you suggested that I take a couple of blank charts and just chart them from scratch so you can see my plays before they execute. So I'm just gonna go ahead and do that. I will pick one stock. Let's do Google. I haven't done Google in a while. So now I can tell you my entire analysis of Google from a blank chart. Okay. Google blank chart. So as always, the first thing I'm going to do is I'm going to chart out my zones, and I'm only going to chart stuff in this general area. So nothing on a daily time frame. Let's go to a 4-hour time frame. Don't see anything of interest. Let's go to a 3-hour time frame. Right, really don't see any clear zones. 3-hour. I'm also focusing a lot on used zones. Okay, so I do see a 2-hour. It's not the best, but I'm still going to count this as 2-hour demand. And just to save time, I'm not going to extend the rectangle. It'll just take too long. That's 2-hour. Now let's go over to 90-minute. Don't see much on a 90-minute either. Let's go to 1 hour. Don't see much on a 1 hour. We did have this very, very clean 1 hour zone, but we invalidated that yesterday. Okay, I see this pretty clear 1 hour demand zone down here, so I'm going to go ahead and mark that up. So this is a 1 hour zone. I don't see any fresh supply zones. Keep in mind that when I do trade breakouts, I'm only considering fresh supply zones because those have the highest probability of working out. If they aren't fresh, they really don't concern me. So we did have this 45-minute supply zone, which we broke through today. No reason to mark that up. And then we have this 30-minute supply zone right here. However, this supply zone has been tested several times. 1, 2, 3, 4. So I am going to mark this supply zone for context purposes. However, when I do trade breakout levels in this zone, above this zone, near this zone, I won't keep this, I won't really keep that zone in mind because it's not important to me at all. So that's the 30-minute zone I'm talking about. It's been used 4 times now. So if you think about it, institutions have their liquidity filled in this 30-minute zone, and now their orders have been filled 4 times. So the chance that it's going to continue to work out is very low probability in my opinion. Okay, I'm just going to leave it as orange. Okay, so no, that's going to mess with the color scheme. I kind of want everything to be as closely correlated as possible. Okay, so now that I have my zones drawn out, the next thing I do is I identify my main areas of support and resistance. So the first thing which really caught my attention was this wedge breakout right here. But you can see that we broke the wedge pretty nicely right here. We broke it. It was a very, very choppy move. That's why I avoided this wedge pattern today, but this wedge breakout definitely worked out. Came back down, retesting the wedge. Now it's acting as support. So I'm not going to pay too much attention to the wedge because that setup is already gone. Good job if you capitalized on it. I avoided it for reasons, but now I'm just going through any potential areas of support and resistance. So I do see this. See this 1 hour resistance level. It's not the best level, but I definitely would still mark this as a valid level, so I'm gonna go ahead and do that now. So now my trading plan on Google is I identify my zones, I identify my levels. After a strong move from Thursday and a balanced day on Friday, I'm expecting us to break the 2755.56 level and then move up higher. It also, I could also move it a little bit lower, but just this general area right here, if we have a strong breakout above this level, I will be interested in playing calls. First target will be all-time highs, and then second target will probably be 2,800. So that was my entire plan from Google from start to finish. I identified the zones, I drew the support and resistance levels, I looked at it from a higher time frame. You can see that on a daily chart, we're also making higher lows, which is very bullish. And from Thursday, we kind of look like a rally-based rally. On Monday, if this candle can stay as a doji candle. But that is my entire analysis on Google. I hope you guys understand how I formulate plans from scratch, how I draw these zones. So if you have any other questions, just let me know. You can just hit me up on Discord. That's usually where I'm most active. You can also just leave a comment on YouTube and I'll get back to you probably within the next couple of hours. But I'm going to end the video here. So I hope you guys have a good weekend and we'll be back to trade again on Monday.